Hi, Larry Gaines, Power Cycle Trading. In this video I wanted to show you what market divergence looks like and explain a little bit to you about what it is, and also think about the question, does it really matter? So first off, divergence is when you have something that diverges from the trend for technical analysis. So in this particular chart, you're going to see the QQQ, which is the NASDAQ 100 ETF, and then below you're going to see the IWM, which is the Russell 2000 ETF. And if you look at these two charts, you'll see that the NASDAQ's going up and the Russell's going down. So they're diverging, they're moving apart. So with the US markets, the four main indexes, you'll have the NASDAQ, you'll have the S&P 500, you'll have the Dow, and you'll have the Russell 2000. Now the Russell 2000 is made up of a lot of smaller cap stocks, and the tendency is for when you have a market bottom or a cycle low and the Russell 2000 bottoms, then the rest of the markets tend to go with it. So it's been kind of a leading index. So the Russell and the NASDAQ are kind of leading indexes. So here though you can see the NASDAQ keeps moving higher, but the Russell is in a downtrend. You can see it's cycling down. This is cycling up. So you can see a parallel channel there to the upside, and here's a parallel channel to the downside. So when you compare this and look at the divergence over the other indexes though, you'll see that the markets tend to stall out, and eventually they can pull back for a bigger correction unless the Russell turns back around and starts going in the same direction. So take a look at this next chart. So in this chart I've got the NASDAQ QQQ stacked on the top, the SPY, the S&P 500 below it, the Dow Diamond below that, and the IWM below that on the bottom. So these are all four ETFs that make up the major indexes for the US. So you can see here that the Russell was trending nicely to the upside, and it peaked out right here about July the 1st. Now here is the Dow, or the Diamond, and here it is on July 1st, and you can see that it basically really hasn't gone anywhere. If you look at the horizontal line here, you can see the price is still the same, basically where it was back on July 1st, while the Russell's pulling down lower. So it's going nowhere. Now you can look at the S&P, SPY, and the same. It's going nowhere. It's pulled back. You can look at the NASDAQ though. It's had a move up, but not that much, and now it's starting to pull back. So this is a divergence. So this is kind of a trend to the downside though, that's taking some of the momentum out of the other indexes. So the point being is that if the Russell turns and starts pushing back to the upside strong, then this market will have additional momentum to the upside. Right now, it's this Russell moving to the downside is taking a lot of momentum out of the market, because these are the small cap stocks, and as this goes lower, that means that money's coming out of it, and that money has to flow into other areas. So some of it's been going into the NASDAQ, but a lot of it's also been going back into bonds. Now this chart shows a little bit more of the rotation. This is the Russell 2000 on the bottom, and this is TLT, which is the 20-year bond ETF. So you can see here the bond market's a lot bigger than the equity market. So as bonds are pushing down here, you can see bond prices are going down. What are the equity? The Russell 2000 is having a nice trend up. Are the Russell 2000s leading a nice trend up? And what are bonds doing? They're coming down. So the rotation was money out of the bonds into the Russell 2000. And then what happens here? Now bonds are pushing up, Russell 2000 is moving down. So as money comes out of the Russell 2000, it has to go somewhere. So a lot of it's been going into the bond market. And now you can see the Russell coming off more from that July 1st or 2nd high, and look what bonds are doing, making new highs. So these are correlations to take account of, and these are things that you can look at to give you caution signs in the market. Doesn't mean that the markets are going to totally roll over and crash, but it does mean that the markets are going to stall or slow down at least, and maybe go sideways, churn, or maybe drift lower, or maybe go down a lot harder to the downside unless the Russell starts picking back up. So I hope this helps. Talk to you on the next update.